Hi, welcome. I'm Lyndsey from Brown Butler, the Corporate Finance Director here. And today I'll be talking to you about raising funds for growth. Whether you're a startup or a well-established business, the chances are you are always on the lookout for strategies to grow your company. By growth, I don't necessarily mean growing turnover and profits by double digits every year. Growth can be slow or steady, as well as big and fast, and both come with their own challenges. Often, one of the biggest challenges of growing a business is funding that growth. If, for example, you have spotted a gap in the market and need to move quickly to take advantage, internally generated cash may not always be readily available in the timescales needed. Sometimes more cash is needed than the business can generate, even if it's a long-term project. Whatever the reason and whatever the type of funding you are seeking, it is absolutely vital to have a robust business plan centered around some well thought out forecasts. So what can business owners do to help fund growth? Well, essentially, there are two types of funding available to businesses depending on their needs: debt or equity. Within these two categories, there are several subcategories. However, the best option for you and your company may be determined by your circumstances. For example, the size of your company, that could be turnover or profit-based, the funding that you require, the size of the funding, the level of funding, and what you need it for, the nature of your growth plans, and how much control you want to keep as the owner. First of all, we'll look at debt. So debt can be further split into two main categories: asset-based lending, ABL. So ABL is money lent based on the value of an underlying asset. So for example, property, machinery, debtors, that kind of thing. The second category is cash flow loans. Cash flow loans are based on the cash flows of the business and what repayments the business can afford to make over a period of time. Both are means of raising cash to help fund growth and can be achieved quickly. Like all debt, though, it does have to be paid back, and that in itself can cause restraints on growth. I would highly recommend building a robust forecast to see if the debt raised allows you to achieve the growth you are looking for. If we look at equity next. So equity funding can take many forms and has much more flexibility than debt, but by its very nature, it does mean that you will have to give up some of the ownership of your company. This can vary from minority stakes to majority stakes, depending on the type of equity you use. Equity is seen as a traditional method of funding growth, as it has more flexibility and allows you to not have to worry about making sizable debt repayments. However, equity providers expect relatively fast growth, as their typical timeline for investment is 3 to 5 years, by which time they would have expected to make a return on their investment. The type and amount of equity available to a company will vary depending on the size and stage of the business that you are. How to choose which is right for your business. There are no right or wrong answers to which type of funding is the best option for you. Quite often, your circumstances will dictate what is available to you in the market. For instance, if you are a long-established company looking to make an acquisition, then it's likely debt funding is going to be the best option for you. However, if you are a startup looking to exploit a new market with new technology, then more often than not, equity, particularly venture capital, is likely to be the better option. Personal preference will also play a part in what option is best for you. With equity, as mentioned, you may have to sell some of the equity to raise the funds, which ultimately means that you no longer have ultimate control. This may be a deal breaker for some. Once you have decided that you want to raise some funds for growth, I would highly recommend taking professional advice. A professional will be able to talk you through all the options available to you and advise on what they think is the best route for you and your business. If you have any further questions on funding options, then please do not hesitate to get in touch.